Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka, and my colleague.
Hello there. Good evening. I'm Yatin Mota.
Yatin's evening has already started. Mine is still some time away. But Yatin, it was a day of breather for the Bulls after a 900-point up move in the last two sessions and reclaiming that 24,300 mark yesterday. We didn't really manage to defend that 24,200 mark. We were holding on to that level,
Hmm.
clutching onto that level, so to say. But towards the end of the session, I think some bit of weakness came in once again, and we ended below that 24,200 level. But it wasn't such a bad day. It
Correct.
was a volatile day. We had a good start. 24,340. I think that was the swing high for today. But we took out that level, and in fact, there's some bit of volatility kicked in at higher levels. And of course, I think sell on rise was at play today. Still, you can't really say whether the trend has reversed or not, because
Hmm.
most of the technical analysts are either looking at 24,350 on the upside, a close above that level, or some of them are going ahead and saying 24,500.
Hmm.
So decisive close above these kind of levels will say whether or not the trend has reversed or not. But aside of that, I think broader end of the markets were faring better than the frontline indices. Small caps were outperforming today as well. Market breadth was also in favor of gainers. In terms of sectors, autos and pharma were the top laggards. On the flip side, you had IT, resuming up move, good traction coming in on the IT pack. Even FMCG did well today. Individual movers, Shriram Finance, Britannia, Bharat Electronics continues to do well, Yatin.
Hmm.
Infosys, Asian Paint, some of the other IT names also doing well. On the flip side, Adani Group stocks once again under pressure. I think
Correct.
after S&P, it was Moody's and Fitch. Both of these rating agencies have also, said that their outlook on the Adani Group is now negative. So Adani twins, top Nifty laggards, Bajaj Auto, Ultratech, Sun Pharma, M&M, NTPC. These were some of the other laggards. But Yatin, from the broader end of the markets,
Hmm.
telecom stocks
Yeah.
were in focus, and we had a good run.
Yeah. V, which is Vodafone Idea, a
Hmm.
good run, but yes, off the day's high. Clearly, the markets also came in off day's high, impacting a lot of these F&O trades. Nifty settling low by 27 points when the day's high was nearly 24,340. So, Nandita, we were almost
Hmm.
200 points or more off from the day's high. And now the markets also came in it continued to show outperformance versus the broader markets. The mid cap index ended in the positive, and small cap index gained nearly 1%, and that is the reason why the advance decline ratio was almost 3 to 2 when it comes to the national stock exchange. IT, FMCG, media stocks gained the most. Stocks like Piramal Enterprises were the top traded counter in the FNO segment, gaining by nearly 8%. Idea up 8%. Sonata Software also, hitting that fresh 52-week high, trading at 8% plus. What did not do well is Adani Green. That stock saw a 7% dip. Stock is at a 52-week low. So clearly some pressure coming in for that stock. Market capitalization from almost 2.5 lakh crores with the recent highs now below that 1.5 lakh crore market capitalization level. Uh, GVTND, which is an OFS today, stock ended 5% lower, and the offer for sale also concluded today on the institutional side. BSC down 5%, and Fortis also witnessing some profit taking at 52-week highs, down 5%.
All right, those were the movers and shakers from the broader end of the markets. But let's come down to the stocks that are on our radar this afternoon. Starting with MCure Pharma. I think this stock did well. At a time when pharma stocks weren't doing all that well today. Of course, on the back of an upgrade that has come in from Kotak Institutional, they have upgraded the stock to buy from. Yeah, so we were discussing MQ Pharma, Yatin. An upgrade has come in from Kotak Institutional, and the stock was up somewhere around 5%. That too on a day when pharma stocks were down and markets were a little volatile.
Correct.
Although at one point of time the stock was up 10%, Yatin, it halved its gains, but still managed to clock a good 5% up move. The upgrade has come in from Kotak Institutional, driven by strong prospects in Indian as well as Canadian markets. And the brokerage has pointed out that the company has had a good or decent first half of FY25, and it expects a pickup in organic growth in the second half of the current fiscal as well. This was one of the main points that Kotak Institutional had upgraded the counter. Now Kotak is estimating a 9% YOY overall organic growth in the second half of the current fiscal, vis-a-vis a 6% growth in the first half of the fiscal. Now growth will be driven by upbeat prospects across India, Canada, and rest of the world, because this company stands out vis-a-vis other pharma companies because it doesn't really have an exposure to the volatile US
Yeah.
market, Yatin, which is why it makes it an outlier. And so that's why they say that other markets where it is dominant, like India, Canada, rest of the world, there it has great prospects and organic growth will be pretty strong in the second half of the current fiscal. Now, aside of organic growth, the in licensing deal with Sanofi is expected to drive the sales CAGR going forward. Also the consolidation of its arm Mantra, as well as abating legal issues, these are some of the factors that would drive the sales CAGR for the company in the second half. Overall, a 13% sales CAGR over FY24 to FY27. These are the kind of expectations Kotak has from the company, and an 18% EBITDA CAGR, 29% EPS CAGR over the same period, FY24 to FY27. Improved productivity, in fact, higher utilization of its new units. These are some of the other factors that are expected to drive the EBITDA as well as EPS CAGR for the company. As I mentioned, it's the lack of exposure to the volatile US market that has got the street a little more excited about this particular
Yeah.
counter. It made a strong debut back in July, I think over a 30% premium to its issue price when it listed. Although the stock has corrected a fair bit, I think 17% or so from its highs, but it's still up 5% from its listing price of somewhere around 13.25 or thereabouts.
And MQR Pharma there on your screens, 4% higher. Volumes are slightly lower on the counter today. But moving from pharma to defense, and today both the frontline defense stocks in the PSU pack, BEL and HAL, were in focus. BEL, which is Bharat Electronics, and HAL, which is Hindustan Aeronautics, are being initiated coverage today at JP Morgan. Obviously, they have overweight rating on both of the stocks, with BEL having a target of 340, and HAL, according to JP Morgan, the target on the stock should be 5135. Now, JP Morgan in his report writes that the kind of defense production increase that we are seeing, especially for HAL and BEL, should not only benefit the earnings momentum, but the export markets are also opening up for India and Indian PSU defense stocks. Recently, we saw that how government is focusing on defense deals. Recently, we saw one of the Pinaka regiments being exported to Armenia. We also had the howitzer gun, which is a short range arm, which was exported from Bharat Forge. So I think on the export front, both PSUs and private sector is looking good. When it comes to BEL, that remains JP Morgan's preferred pick in the defense space, and they believe that the company's preference is largely due to the exposure to the structural growth that they see. BEL manufacturers a lot of defense systems, including radar systems, missile systems, as well as critical components which are used for defense purposes. So BEL, recent Nifty inclusion, that stock has done well, and HR also is on the radar of JP Morgan. Both stocks, obviously from the recent high, have been correcting a lot, but today we saw both of the stocks gain anywhere between 2 to 3%.
That's correct. Yeah, I think PSU stocks, once again they've recovered pretty smartly, especially after the Mahayuti's win in the Maharashtra elections, and all the PSU stocks have once again come back into the
Correct.
spotlight. We saw PSU banks also doing well over the last few sessions, defense names, and with JP Morgan now initiating, looks like experts are saying that of course opportunities are there. It could, who knows, it could be an attractive entry point, which is what
Mm.
JP Morgan has also pointed out after a 30 to 40% correction from their life highs. But the other stock on my list, yeah, I think yesterday it was Zomato, today it's Swiggy. It's all about quick commerce, food delivery. We are all up for food at any point of time. But yes, Swiggy was, has delivered well today in today's session. Saw 5% gain. Of course, that was on the back of an initiation by UBS. It has initiated coverage with a buy rating, and it expects a 20% upside from current levels, target price of somewhere around 515 or thereabouts. Now, UBS has pointed out that the company is well positioned to benefit from the rapid growth in India's food delivery and quick commerce markets. Of course, all the action is happening in this space, right? A lot of action. We saw Zepto as well, coming up with a fundraise of $350 million, a huge fundraise, and that too from domestic
Mm.
investors. Plus, Amazon also saying that they will also, throw in the hat and come into the quick commerce space. So yes, competition is increasing, and Swiggy is also, of course, primed for growth, although it is some time away from profitability. But in
Mm.
terms of online food delivery, Swiggy is closing the gap with Zomato in terms of margins and scale. That's what UBS has pointed out. And when it comes to the quick commerce segment, progress is promising, but it needs further improvements in this
Mm.
particular segment. Now, UBS has said that the company is well positioned for 35, well positioned for growth at a 35% discount to Zomato, and the estimated gross merchandise value as well as revenue CAGR stand at 35% and 29% over FY24 to FY27. These are estimates that have been laid down by UBS. Stock is obviously at a 35 to 40% discount to Zomato, but UBS sees room for valuation discount to narrow going forward as the company is demonstrating stabilizing market share. The key focus areas, however, will remain increasing fundraise activities as well as growing competition in the quick commerce sector. The stock did receive recommendations even before making its debut. I think it was JM
Mm.
Financial that initiated coverage with a buy rating at that point of time when the stock was about to make its debut, in the stock market. And JM Financial had laid out a target of 470 rupees on the stock, and they had said that Swiggy continues to be one of the leading hyper local delivery platforms in India, bettered only by Zomato, and they saw good prospects for Swiggy, even though it had ceded some bit of market share to Zomato. But Macquarie, that had a contrarian view in the on the entire quick commerce space. Yatin, they had initiated coverage on the stock with an underperform rating and a target price of 325. And for Zomato also, they had come out with a target price of 130, which is half of where the stock is. Now, they believe that the unit economies are not
Yeah.
sustainable and valuations are very challenging. So, quick commerce is a complex business. So, Macquarie taking a contrarian call. But here, UBS is saying that, no two ways. Swiggy is well positioned and it could also give Zomato a tough competition.
And I think, Nandita, one thing is for sure, UBS doesn't like those new age companies. I
Hmm.
think Paytm also, they
Hmm.
continue to be slightly negative and they have been right, obviously, there.
Hmm.
But yes, Swiggy, Zomato, I think quick commerce has changed the
Yeah.
fortunes of these companies,
Hmm.
especially for Zomato. The kind of IPO listing and, the stock falling, then the return of profitability and then the return of quick commerce, something I
Hmm.
think which changed the fortunes, market capitalization now more than 2.5 lakh crores with now
Right.
Nifty inclusion also happening in the near term. Swiggy
Yeah.
also one of those good listings, and the stock today 7% high.
Well, of course, good going for the likes of Swiggy and Zomato. Of course, inviting brokerage upgrades, coverage initiatives, etc. But of course, one stock that will be in focus tomorrow will be NTPC. Yatin, NTPC Green
Doing
is
his
making
IPO,
its
the listing is there.
debut tomorrow. So good retail participation. So yeah, that will be one event to watch out for tomorrow. But I think those were all the stocks on our radar this afternoon. We are done for the day, and evening has started, Yatin, now for us. But with that, we've come to the end. Thanks a lot for tuning in. Of course, stay tuned to Money Control for all your other news and updates, and have a great evening.